Hello again, everyone. Welcome back. Today is Wednesday, November 17th. And this video tonight, I'm sharing with you the weekday market wrap video that I provided to my members this evening. So I hope you find it helpful. Hello again, everyone. Welcome back. This is the weekday market wrap for Wednesday, November 17th. Well, we had a lot of red today, as you can see up here in the macro watch area, and percentage-wise, the biggest loser was oil. The West Texas Intermediate down $2.65, over 3% today, and then here's followed by copper, the 10-year yield down 1.8%. It's sitting at 1.60% in terms of the actual yield itself. And then oil, and then transports. You can see where's the Dow. The Dow is down 211 points. S&P 500 only 0.25% down in terms of its loss, 12 points. And when you look at the Nasdaq Composite, it's right in the between those two at about 0.33%, down 52 points. So that's the picture with the big three. And where is the Russell 2000? Here we go. Down 1.4% when you round it. So to the upside, we had gold and silver. They moved fairly well, almost 1%, both of them to the upside. So let's dive in and take a look. Actually, what I want to do is I want to scan down here and show you something before I do dive into the indices. Here's the S&P 500 sectors. So because oil was so weak, we had XLE down 1.7%. And the financials were right there, pretty negative also, over 1% lower. And then we had real estate and consumer discretionary as the leaders to the upside. And then when we look at the favorites list, look at what happened with Baidu. Baidu had earnings out. I think they came out yesterday. But look what they did today. You know, down $9.37. Maybe it was this morning. Let me see. When did those earnings come out? Yeah, Baidu was this morning before the market, and that's why we got this reaction today. What's going to happen is tomorrow we got Alibaba, but look what it did today. Alibaba is right there down almost 4%, and their earnings are coming out before the market opens tomorrow morning. So that is the picture. And then in terms of the ones that were the strongest, General Motors continues to push to the upside. And here we are with Barrick Gold. That's one of our trade ideas that we are in. Now, Apple, and I'm still in it, still holding. It pushed really nice to the upside. It gapped up today, and it continued to push. My short-term target is still 2140. If we come up and hit 2140, I will be exiting this trade idea. I just feel like it's had a pretty good move. We're running into a long-term trend line, and you know I'm gonna just exit and wait for a pullback. Now, the other one that we're in is Apple. Actually, I exited literally minutes before the close today. And the main reason is, you know, I'd been watching this and I was looking, see the dotted line up here? That's the top of the Keltner channels. Here's the bottom of the Keltner channels right down here. I was looking for a close above the Keltner channels. And if we got a close above the Keltner channels, I was going to exit. And I thought, well, okay. You know, I took a look at 2:30 in the afternoon with 30 minutes to go in the market. And I said, well, you know, I think it looks like we're going to stay. And then all of a sudden, it occurred to me that I saw that this other peak that we had over here on October 28th, that this was, you know, a 20-day high. And here we are eking out a close above a 20-day high. This is a potential turtle soup plus one sell signal or sell setup. And what I mean by that is we're closing above a 20-day high. And if we come around tomorrow and break down below this low, below this high, this dotted line right here, it's the potential for a sell-off in Apple. And that combined with, you know, what I'm looking for in the market short term and the way the market's acting, it looks like there's more negative move to go here in terms of coming back. You know, the Dow's leading the S&P and leading the Nasdaq to the downside. The SPX and the Nasdaq just really haven't played ball yet. They haven't really turned south to any kind of degree. Yeah, they were negative today, but not all that much. So let's dive in and take a look at the Dow Industrials. Okay, let me scroll back up And let me put this in alphabetical order so I can easily find what I'm doing. Here's the Dow. Here's the picture. You can see how it ended almost on the low for the day, down 211 points. Now, this is the Elliott wave picture we've been working. This says that the high on November 8th was the end of the 5-wave move of the 5th minor wave, the 5th intermediate, the 5th primary, etc. The alternate count says, oh no, maybe this was just wave 1 and we're going to get wave 2, and then we still have 3, 4, and 5 to come to complete, minor wave 5. We'll see what we get in here in terms of how negative does this really get. I mean, so far the breadth of the market, it was 2-to-1 to the downside today, but it wasn't, it wasn't like it was 3-to-1 or 4-to-1 to the downside. So it was still negative, but just not severely. We'll see what happens here in this next move down, because this is my short-term target no matter what, on the Dow anyway, is the low of the previous 4th wave. So if we drill down and take a look at this, this is what it looks like on the 65-minute chart. So in the 3rd wave here, it looks to me like we had a wave 1 down and we're kind of chopping out a wave 2. So that's where we're at, and we're right down here near the lows of that first minute wave down, right like that. So that's what we're looking at. Let's take a look at the SPX. Let me go back to the moving average view, and let me show you this. Now, I mean, when you look at the difference, an inside down type candle, we have not gotten any closes below that 10-day moving average, which I like to see if we're really breaking down. And then especially in here, same kind of thing. I'm working an alternate. I've got this as a possible 5th minute wave. Well, why is that? Because when I looked at this wave 4, I could see how you could make this as a 3-wave move, and that this is a 5-wave move. And I talked about this last night, that it could be a truncated 5th wave. And then look what it did in here today. Okay, we came down, did a lot of sideways chopping in here. We're getting compressed. We're tightening in here. But this looks kind of negative to me. So we'll see, is this going to follow the Dow steps to the downside? That's what it looks like, but we'll see what happens tomorrow. Okay, so that's the picture on the S&P 500. Let's take a look. Let me go back to the moving average view. Let's take a look at the Nasdaq Composite. Wow, look at that. Almost identical to the S&P 500. And again, we're looking at this moving average, or this Elliott wave picture. Now, it's a little bit different in that, I'm looking at this wave 5 high here on November 5th. And so then what are we doing underneath the covers? Let me look at this right here. Okay, so this looks like a 5-wave move down for wave 1, and then we've got a 3-wave move back up for wave 2. So if that's the case, we should be breaking down and rolling over and coming down here, and actually should start to accelerate fairly quickly. Let me draw something in here, because when you get a zigzag like this is what I want to do, just like that. Well, we really broke that today. It was at actually that was midday, because I'm looking at a 30-minute chart. So this was the first 30 minutes of the day today. And we rallied back up. You can see how it wasn't confirmed. And then it broke down hard in the middle of the day. And then this is where we're sitting. We're just kind of chopped sideways. So we'll see. I mean, it and the S&P 500 look like they could be ready to come down hard. So that's what we'll be looking for. And we're going to find out real quick whether this is a viable scenario, or are we going to find out that this is not the 5th wave to the upside. So, we've laid out the parameters. We know what we're looking for. And actually, I don't need to see this. Less than a day. There we go. Okay, so that's the picture on the indices. Let me look down at my notes. Yeah, the down volume was 2-to-1 to the upside. To the downside on the New York Stock Exchange. That was the breadth, the issues. the volume was 71% of the volume was to the downside today. Let's take a look at our indicators because we got some negativity showing up there too. Look what the VIX did today. So we closed above yesterday's high and back above the 10-day moving average. So nice little move to the upside with the negativity that showed up in the market today. So that looks good. When we look at for the bearish view anyway, let's put it that way. When we look at the McClellan Oscillator, look at how we are now down here oversold at minus 96. So we're starting to accelerate that oscillator to the downside. So that's in sync with what we're seeing. And the percent of stocks above their 50-day moving average, look how this is breaking down on the S&P 500 for the first time in a couple of weeks. First time back below the 10-day moving average in several weeks. And first time back below 70 since over here on November 4th. So again, a couple of weeks. So as you look at the number of days right here. But when you look at the New York, a lot weaker. It continues to just get even more weaker than what I talked about last night, sitting at 59% on the number of stocks, percent of stocks above their 50-day moving average. Okay, the high yield bond fund continues to say risk off. HYG down 9 cents. So this continues to look negative. We haven't broken this trend line yet, but wow. I think if it does, that could be the acceleration that we're looking for in the wave count in the major indices. TLT. See that the next thing I wanted to show you. Yeah, TLT. Okay, so here's the zag and the zigzag, or at least the start of it anyway. I mean, we've had this big move down, and I said, okay, I'm looking for a counter trend back up. Well, we got the start of it today, or at least part of it. Let's put it that way. It was up $1.18. So what does that do? That gives us a 10-year or a 10-year yield sitting at 1.60%. Kind of bearish engulfing type of candle. I would expect this to come back down a little bit more, which would be in sync with TLT rising more. Okay, so let me take a look at something from the length of this move from high to low. A retracement of 50% would take you back up here to 148. So I think at a minimum, we're going to probably get that. So that's something to keep an eye on. Okay, so that is where we're at with the interest rates. So then what did the dollar do today? Dollar index was up 0.15, or no, I'm sorry, down 0.13 actually. I was looking at this earlier. Yeah, 0.13. Still moving around a little bit. So to me, this is a little bit of a pause, but we continue to, it's tracking with exactly what we're looking for right now. Now, what's happening with Bitcoin? I don't know why this didn't adjust over here at Bitcoin. These both were a little bit of consolidation type days, really inside up $1.32 on GBTC and Ethereum. I just need to update. I always go to that. I just need to update that wave count. This was up $1.21. So again, just a little bit of almost looks like an inside, although it went a little bit lower than yesterday's low at one point, but then just kind of hung right in the middle of the range. So no change in the wave count in terms of what we're doing there. Now, I talked about how oil got whacked pretty hard today, West Texas Intermediate. So this has come to a lower low. So the only thing I could conclude is we still have a wave 4 that's trying to subdivide. I just don't think that this is the end of the fifth wave up here. Now, it's possible that the fifth wave ended right here. We'll see how negative we get and how far down we get in terms of what we've got going on with wave 4. I tell you what, if we continue to come down. Now again, if you're playing this or if you're playing oil, you've got to have based on the setup you're using, your entry point, what your loss is, all that kind of stuff. I'm looking at the wave count that says okay, if this wave 4 continues to pull way back down like this, you got to sit back and say, okay, something different is going on. This should not get, it's already gone a lot longer than I expected it to go. So that's the major thing that's on my radar. I got to sit back and say, right now, there is a question in my mind, did wave 5 end right here? And we've got something bigger going on right now. But we'll see. Right now, this is just a 3-wave. We just got a little counter trend right here. So anyway, that's my best take on what's going on with oil. We'll see if it makes itself a little clearer here over the next couple of days. Now, gold and silver, they acted very nice today. GLD was up $1.58. It didn't take out the highs. You can see how we're just kind of clustering in here, but it's still holding up. And SLV, same kind of thing, up 22 cents in the regular session, although not quite as strong as it's not looking as nice as what I'm seeing in gold. So we'll see if this continues to hold. But right now, so far it is. And then, of course, we're still in that trade idea with Barrick Gold. Where is that? And let me go back to the moving average view. And let me go here. So still in this, I like the way it gapped up. I like the way it pushed. I'm disappointed that I actually was hoping, man, I continue to struggle with my voice late afternoon for whatever reason. So I was actually hoping for the moving average, for this to come up here and hit the target and the downward trend line today. It just didn't get there. And see how it petered out? Here's the morning session, and here's the afternoon session. It didn't do anything. It just sat there, a little doji type candle. So just going to stay with it for tomorrow. We'll see what happens. Okay, that's it. I don't have anything new. I'm going to scan back through. If I do, I'll put something out before the market opens tomorrow morning. Okay, that's it for tonight. Everyone have a great Thursday. We'll talk to you again tomorrow night. Okay, that was this evening's video. If you found it helpful, give it a thumbs up here on YouTube. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information, head on over to joehenches.net. Check out the website and check out the membership. All right, everyone, have a great rest of the week, and we'll talk to you on the next video.